So this is not legal advice, but the things that I would say are important for somebody on their first rental is definitely learning to calculate the rental property appropriately. So getting very familiar with your numbers, and your numbers include, the taxes, the insurance, and your mortgage, any interest, and then also like how much money you're regularly going to set aside for future repairs on that property. As far as having insurance goes, I mean, you should have it, right? It's silly not to. There's a lot of different ways to save money, and insurance is not one of those. It's a high risk, low reward type situation, in my opinion, because you don't want to be out a lot of money because your place burned down just to save $1,000 a year. The reward is very low. So educating yourself on the insurance. I've recorded like a playlist of insurance videos that I think is helpful. And I even wrote a book. It's that blue one behind me, Rental Property Insurance, an Investor's Guide to Insurance. I tried to hit all the keywords so that it would show up first for search engine optimization. It's a very, very technical, uncomfortable to say title. It doesn't flow, but the computers dig it. So yeah, I think that book, it's only like 80 pages, and it's a quick read. You should be able to do it in less than a day, and it's got tons of information in it, and it does a better job than I could do just trying to say all that information. As far as taxes go, there's really nothing that you can do to like interact with that at all. You kind of have to pay whatever it is they say, so you just want to make sure that you include the taxes in your initial like analysis. From a legal perspective, I don't know, consulting with a CPA or a CPA and an attorney to make sure that you are not breaking any laws and that you are doing right now something that would be beneficial for you long term. I guess I meant now that I would be a landlord, how to write a lease, tax write offs for expenses, umbrella insurance, following city codes, things like that. I see. Well, for writing a lease, I would not recommend that you do that. In order, like what we did with our lease is there was a property manager that I was close with that we used for a long time. We just took her lease with her permission. We added a few things to it that we wanted, and then we had our attorney approve it, and then we used it. So, an attorney and a realtor or property manager that you're comfortable with is a good way to start. Get a copy of their lease. That would be helpful, and then having an attorney do it. I would not recommend that you sit down and write your own lease. As far as tax write-offs for expenses, any expense that you make for the property is a write-off. So I would just keep a really good record of what you buy and why you bought it. And I would suggest using something like QuickBooks, something that syncs with your bank account that's used for your rental properties. And each transaction, I would just make a note for what property it was for and what it was in regards to. Then I would do that. And then the CPAs that you rely on, they're the ones that are going to calculate your depreciation and all the other like tax related things that are important to you. For businesses, it's truly as broad as income minus expenses, right? So your expenses are technically all tax write offs. Umbrella insurance is important. Generally, the rule of thumb that I use, and it breaks down to a certain point, probably when your net worth is around $3 to $5 million mark. You generally want your umbrella insurance to be equal to or greater than your net worth. If your net worth is lesser than a million, then a $1 million umbrella insurance puts you ahead of everybody else in your peer group. Puts you in the top 1% of insurance consumers. And then, once your net worth hits that $1 million mark, then you're going to want to, revisit, get like a $2 million umbrella policy. And I think that's just my general rule of thumb. Again, each scenario and case is different. If you're married to like a political figure, or if you are a political figure, or if you've got, any sort of like public persona, then I think things change. But if you're just an average person like me that has a growing net worth, then you're just going to always want to make sure that your umbrella insurance is equal to or greater than your net worth. Get a lawyer and a CPA, a good realtor, an insurance agent, and a good team of contractors, and you're going to be well on your way. That's all you really need. And having a good, solid relationship with all of those is exactly what you're after. Thank you for your answers. Looks like I need to do more planning and research. I've heard you say it takes about 2 years for the lender to qualify rent as income. Yeah, they consider some do. Again, each bank is different. I would encourage everybody not to look at banks as like this homogenous thing with like one set of rules, right? Each bank has their own money. Each bank has their own rules and what they're willing to do for people. Reaching out to a lot of banks, figuring out which one is likely to work with you, and kind of going for there. Yeah, I mean, 2 years they consider it to be like a new business venture, and after 2 years, either as that's when your business is quote unquote successful, and that's when banks are willing to start talking about the income that's a result of those. 2 years is a big milestone for investors that want to use their rental income to qualify for additional funding. Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.